Hello and welcome. You're watching Money, Money, Money. I'm Sumera Abdi. Well, people are not wrong when they say that India is a nation of savers, but all's not well. The ratio of financial savings of households as a percentage of India's GDP has been steadily falling till 2011-12. Well, that's the latest fiscal year for which the data was available. In the latest budget as well, Finance Minister Jaitley has even tried his best to encourage savings. And I guess what's not helping is some of the bad experiences that people have had in the form of missold products. But worry not, help is at hand. Rajiv Anand, Group Executive and Head of Retail Banking at Axis Bank, is here to help us understand how consumers can avoid getting into these situations and the approach thereafter. Hi Rajiv, thanks very much for being a part of our show. But before I get to ask you a question, I have a note for our viewers, and I'll tell you why you should be hanging on to every word Rajiv is saying. At the recently held Financial Advisors Awards, Axis Bank won the prestigious award for the best private bank, and you can see there Rajiv collecting that award. Once again, Rajiv, many congratulations. We're very happy to have you here. But tell us something. Everyone goes to the bank, everyone says, trust your bank, and which is what everyone does. But the relationship manager, sometimes people have had bad experiences. What exactly is the role of a relationship manager?
First and foremost, thank you for having me here. For our key customers, the more affluent, the wealthy customers, the pivot around which the relationship is really run is around the relationship manager. The relationship manager is expected, think of him like your financial doctor. He's expected to know the customer really well, fairly deep in terms of understanding his risk profile, his risk, his cash flows, not just today but over the next few years, where he is in terms of his life cycle. Is he married, young kids, old kids, parents, and so on and so forth. And therefore, once you get to know the customer, he's expected to build a portfolio such that the customer is able to meet his long-term financial goals. And I think that is the key, to help the customer meet his long-term financial goals. And that is the role of the relationship manager.
True. So the idea is basically to have tailored products then to fit the need of that customer.
Absolutely.
So where is the disconnect then?
There is times when, and it could happen in any place, where this is in a sense the ideal situation, and I think by and large most large organizations spend a lot of time and energy to ensure first and foremost that the relationship manager is well versed in terms of the products, processes, and most important in terms of compliance, and he is really taught to do ultimately what is right for the customer and what is right for the bank. Yes, there could be some cases which may crop up from time to time where the relationship manager is selling a product which is not appropriate for a particular customer's risk profile, because he wants to sort of do what is right for himself, which is meet his annual budgets or whatever it is. But remember that most large organizations do have checks and balances around this. So let me give you an example. One of the more complex products that one has is insurance.
Right.
And there are multiple types of insurance. And there is, when the relationship manager explains the insurance product, it takes 2 or 3 iterations before the customer is able to understand the product. The customer signs up. We then have a welcome call made by the insurance company to ensure that the customer has understood the product.
Okay.
And thereafter, even after that, there is what is called a free look-in period that regulations permit you, saying that after 15 days, if the customer still believes that this is not the product that he wanted to buy, he can cancel the product or cancel the purchase without any costs. So there are large organizations ensure that these checks and balances are in place to ensure that at most times the relationship manager is doing what is right for the customer. I think regulations, both in terms of SEBI for mutual funds and RDA for on the insurance side, I think have done a very, very good job to ensure that that the customer's interests are protected at all points in time.
But Rajiv, in this case, since you mentioned insurance, would a relationship manager require that he be certified by IRDA, or if you're selling mutual funds, would you require to be certified by AMFI?
It is the law of the land, Sumera, that nobody can sell insurance or mutual funds unless they are NISM or IRDA certified. So as far as the bank is concerned, we ensure that all relationship managers are certified. And if there are relationship managers who are not certified, it means that both the relationship manager and the organization are in violation of the law of the land.
You know, a lot of people have complained of, relationship managers or direct sales agents being very, very aggressive. So is it that they're chasing very aggressive targets, or is it because the commission on some products could be very high? I mean, do you think that's a factor which could be at play?
Once again, what large organizations tend to do is that they separate out the choice of the product and commissions. So therefore, let me give you an example on the mutual fund side this time. We have a fairly elaborate research process which picks the best mutual fund schemes that are available in the marketplace across various categories, diversified equity funds, small cap funds, bond funds, and what have you. And those are the recommended funds based on a set of parameters that we have set out from a long-term perspective. There is another set of team which actually works with the mutual funds in terms of ensuring that sales happen through our system, meaning that engaging with the relationship managers, explaining the product, ensuring that the bank is adequately compensated from a distribution commission perspective. So therefore, the two teams are actually separated out, and they finally sort of get together only in the field. So the relationship manager in that sense has little or no say in terms of the commissions that we receive, right, either from the insurance companies or the mutual funds.
But, Rajiv, I'll give you an example. So I understand that the idea is to have ease of transaction for the customer. But sometimes, it goes too far. For example, like somebody may go and, they're told, take care, you don't have enough time, I'll fill out the form for you, why don't you just sign? Or, for example, he may just call up and say, verbally give you the benefits that a product may give. You may never actually be seeing that. So do you think at some point also it's the customer who needs to take the onus upon themselves?
Let me start by saying that regulations are moving towards let the seller beware rather than let the buyer beware. So therefore, the regulations already put a huge amount of responsibility on us as sellers, and we completely abide by that. However, on the other side, I completely agree with the point that you make, that as far as the customer is concerned, this is hard-earned money. And so therefore, when you look at people, when they buy a TV or when they buy a fridge, they research across websites, they go to various stores, they look at all the features across various TVs and what have you. But when it comes to buying a mutual fund or buying a stock or an insurance, no such research is done. And so therefore, I would urge people to sort of think about investing a little more seriously. Yes, there are enough very high quality relationship managers or investment advisors that are available in the marketplace for you to help make that informed choice. But I think ultimately it is your money, and it is imperative that you do put in some effort before you invest.
That's a valid point, actually, and very, very fair. So viewers, the next time you go in and you're going to make an investment or a saving or buying a product, remember the onus should be on you. It's your money, and you need to work a little bit to make it work for you. But what we'll do now, Rajiv, is we'll take a very quick break. We'll come back in just a bit. Up next, we'll tell you the recourse that you can have in case you've been sold something that's not appropriate. Stay with us. We'll be back in just a bit.